Right, are you guys ready for the market to flush like a toilet? Are you getting your markets in line? Are you girding up your loins? Because I think we're going to see a little bit of a fall here. Not a troublesome pullback, but just a profit-taking pullback. But we do need to go through and need to look at our portfolio, make sure everything's in line so that we are prepared for it. We know what's going to happen, and we're not going to be scared. And we're not going to fall for the media and all of their lies. All right. So we're going to come in and we're going to look at our portfolios today and we're going to see what we need to do to make things happen. All right. So let's come in here and let's start off by going to our economic calendar. All right. First thing we want to do is today's a big Fed day. Fed Chair Powell speaking, Fed Bowman speaking, Fed Barr speaking, Fed Bowman speaking again. Powell spoke at 6:30 and the market flushed. Okay, so my portfolio is down like 20 grand today. Of course, that's, my portfolio fluctuates 20 grand a day. So, but that's, this guy cost me 20 grand a day from his words, just from his words. Anyway, don't expect a lot of anything, out of the Fed. These guys are a bunch of politicians. And so they just get on there. Oh, it's going to be really good. Oh, it's going to be really bad. Oh, it's going to be really good. Oh, it's going to be really bad. Oh, it's going to be really good. And then it's going to be really bad. And then, oh, we expect it to be good. And then we expect it to be bad. And, oh, we're going to do this. We're not going to do that. And then we're not going to do this. We're not going to do that. So you never can get, all they do is like to scare the market. What's more important is what's going to happen next week. Wednesday, October 15th, we got core inflation coming in. We got core inflation month over month, year over year, and inflation rate month over month, inflation rate year over year. So this is what's going to really tell the story. Now, the problem is that they come out with their initial numbers and then they always change them. All right. Oh yeah, we had new numbers, and so we got to change them now. We got new information. It's like, why didn't you have that new information when the report comes out? Oh, because we got new information. There's always they throw out numbers and then they reevaluate them. It's always, for some reason, I don't know why it is, but it's under the Biden administration, it was always the numbers came out really good and then they adjusted them down. Under the Trump administration, they come out really bad and they have to secretly adjust them up. So who knows? It's all some kind of game they play behind the scenes. We all know that. So if we're going to come in here and look, on Wednesday is going to be the bigger day. Today is just a bunch of political speak, and these guys aren't going to say anything that's going to make any sense. So far they've scared the market. That's all they've done. And then core inflation, this will be the big things. But then the numbers will be, whatever they come out with, and then they'll change them. So who cares? Who cares anymore? So core inflation rate is at 0.3. That's the current right now, and they're forecasting it not to change. That's month over month. Core inflation rate year over year is 3.1. They're expecting to go down to 3.0, so we'll see if that happens. And then inflation rate month over month, 0.4, and then they're not expecting to change on that. The forecast is 0.4. And then the inflation rate year over year is currently 2.9, and they're expecting to go up 3.0. So that's a tick up just a little bit on the inflation rate year over year. All right, so that's what it is. Inflation is currently running at about 3%. That's not good. I mean, if you think about 3%, that's a tax, all right? It's a tax on your dollars. So 3% inflation rate is a tax of an additional 3% on your money. So that means that what's happening is they are devaluing your money by 3% every year. All right. So right now they're devaluing your money by 3%. They're doing that by printing more money, having big debt on the, government debt. It's just, that's how they do it. So 3% is devaluing your money. So you want to put your money into some place that is not cash or cash equivalent. All right. That's why gold, you put money in gold kind of, technically speaking, gold hasn't changed in the last 30 years. I got a little chart for you. I'm going to show you a little chart and you're going to be like, what? I've showed you this chart before, but inflation is the rat that eats your net worth. All right. I made this little slide for you. Let me get out of the way so you can, how do I get out of the way? Somehow I can get out of the way here. There we go. All right. Inflation is the rat that eats your net worth. Someone who has a million someone who had a million, who was a millionaire in 1935 and held it in gold, is now worth $57.14 million today. Yet the price of gold has not gone up. What do you mean the price of gold hasn't gone up, Lan? Gold is, look at that. It got a 1 million went to 57 million. No, price of gold didn't go up. The value of the dollar went down. The same millionaire who held it in US dollars and today only worth $46 or $46,800. So this is how much gold it took to buy a typical single family home in 1935, which was approximately 4,700. Same amount of gold. Same amount of gold. Not more gold, not less gold. The exact same amount of gold. This is how much gold it takes to buy the typical single family home today, which is approximately $400,000. The same exact number of bars of gold. Same exact gold. Gold didn't go up in value. The US dollar went down in value. All right. Gold held its value. US dollar went down in value. Big difference. That's why we want to put our money into something that is growing faster than 3%. Otherwise, you're going to lose 3%. Every time you throw your money into the mattress, every year, you're going to come over here and you can look and see how much money you lost. So I lost 3%. Okay. Every year that the money sat in my mattress, I lost 3%. So far this year, I've lost, 2.9%. Inflation rate year over year, 2.9%, and it's going to be 3%. So we're going to lose 3%. Now, I went over and I put my money into Cash Valley Bank, and Cash Valley Bank gave me 4% return on my money this year. Right? So how much did you really make? 1%. So you basically didn't lose anything. All right. So that's really all a CD does, is it kind of makes it so you don't lose any money, right? So it stores your value, but it doesn't go up in value. Oh, yes, it did, Lan. I made 4% return. Yes, but you lost 3% in inflation. So whenever you put your money into some sort of an asset, not a deteriorating asset like a car or a motorcycle or a motorhome or a boat or four-wheelers or motorcycles, all the things we love, those are all deteriorating assets. Those are not assets that keep money, right? Deteriorating assets. So whenever you put your money into something that is an increasing asset, like a house or a real estate or, the stock market on some occasions goes up. And so these are investments that will actually outperform the inflation rate, right? So they can outperform the inflation rate. Now they got to beat 3% just to break even. And anything above that is profit. So if you're putting it in Cash Valley Bank, you're making 1%. That's all you're making. So you got to subtract 3% from everything you're making. So, well, I put my money into the S&P 500, and over the last 10 years, I've averaged 10% return. Well, good for you. Take 3% off of that. You've actually averaged about 7%. It's better than Cash Valley Bank at 1%, right? So you got to take these things into consideration. Well, my house has gone up in value, and it's almost doubled. Yes. So what we like to think about in that return, the way we think about something like an investment like that, you come over to your slide here. What we do is we like to think about it like this. All right. So let's say $1 million in 1935 is worth approximately $50,000 today due to inflation. Well, 2024 minus 1935 equals 89 years. So over the last 89 years, $1 million minus $50,000 equals $950. So you can do a little bit of simple math here. $950,000 divided by 89 years equals $10,674. Does that make sense to you? A simple little math formula. Leveraging inflation to offset your mortgage. Inflation effects on debt. Let inflation help you pay your home. So, example at this rate, if you buy any physical asset, investment, real estate, land, business, etc., inflation will pay approximately $10,000 a year toward your purchase, historically speaking, if you were buying a $1 million investment. If you're buying a $50,000 or $500,000 investment, it would be $5,000 a year, right? So if you were buying a home, which is, let's say, a $400,000 home, it's going to be nearly $4,000 a month that inflation is going to pay on your home every month. Why? Because it's going to increase in value by the inflation rate, or decrease in value, as it were. The money supply being able to buy your house, right, is going to decrease by on a $400,000 house by $4,000. So that $4,000 is basically going in your pocket by having an increasing or an asset that your money's sitting in. So rather than paying depreciation, you're receiving the depreciation. That's why we want to put our money into real physical assets that grow. Now we can get into the whole debate where we talk about, well, what is a physical asset that increases in value? Should I put it in Bitcoin? We had that conversation already in the other day's video. Is Bitcoin a store of value? Yeah, it is. But I don't like it as an intrinsic value piece of... I don't like it. I don't like any of these digital currencies. I don't like them as stores of value. Why? Because it costs you money to make them. Yes. And that's the whole story. I'll just summarize what we decided last week we talked about. But you go out and you create Bitcoin out of electricity. So it's the cost of the electricity that produces the Bitcoin, and that becomes the value, the store of value. How much did it cost you to make that Bitcoin? And then there's only so many of them. So you can make these Bitcoins. But the problem is you burn the crude oil, you burn the natural gas, you burn the energy producing product, the sunshine, whatever it is, you burn that to create the Bitcoin. You created an infrastructure to do that, right? You're taking advantage of the existing infrastructure, and you're burning up crude oil, you're burning up real physical assets to create a digital asset. And so everybody's like, well, that's where the intrinsic value comes from. Well, you don't have that intrinsic value anymore. It's gone. It's not like you can say, oh, I want to trade my Bitcoin back in for the crude oil that we burned to create the Bitcoin, because it's not there. It's gone. Burned it up, put it in the atmosphere, right? It's gone. You can't go back and get it. But if you trade your money for, if you create gold and you say, okay, I'm going to spend US dollars to go out and mine gold, I now have the gold. It has intrinsic value, because eventually you can turn around and say, well, I want to do something with this. You can't do anything with crypto. You can't do anything with it. You can't go and put it in people's teeth. You can't go and make jewelry out of it. You can't go use it in industry. You can't do anything with it because you burned it up. It's gone. There is no physical intrinsic value. So when we talk about intrinsic value and extrinsic value, Bitcoin has nothing but extrinsic value. It's the only value it has, time value. There is, once you burn up all the extrinsic value, there is no extrinsic value left. And now I'm stirring up a beehive here, and there's going to be people that are going to throw a fit. Len, it does too have intrinsic value. It does. Okay, prove it to me. Show me your example of intrinsic value. Well, it does, because it's scarce. Well, so is the hair on my head. Scarce. All right. I mean, just because it's scarce doesn't mean it has intrinsic value. I know lots of bald guys that get along just fine. Right? I mean, where's the intrinsic value in any of these digital currencies? There is none. So we want to put our money into physical assets that increase in value over time, that are physical assets. I know I've got a bunch of Bitcoin, and I know I'm being a hypocrite here. I'm playing the market. We're all speculators, and we go to a place where we think that their markets are going to make money. And markets are really driven by fear and greed. And mostly, in my opinion, Bitcoin is greed. All right. That's what it is. It's greed. Okay. Fear of missing out. and greed for something that people are giving money for that has no intrinsic value. So I'm a real stickler to intrinsic value. Is yeah. John saying Chad needs to weigh in on this. Where's the intrinsic value? I don't see Chad in here today. Chad, are you here? Because I think that he would have chimed in by now. Because I know he's big into crypto. He's taken some class at the university. John, didn't you say, are you the one that's taking classes with him at the university on crypto and on these currencies? Unmutable, verifiable, P2P. Unmutable, verifiable. What's your P2P? P2P? Anyway, we don't need to go off on this tangent again today, but that's my own personal feelings. And I know all the arguments. I'm not dumb. I've been in this industry a long time, and I've been in it from the beginning with these cryptos, and no one's ever been able to convince me that they have intrinsic value. I know the story. I know they do. I know that everybody says, oh, they do have intrinsic value then. I just don't like it. I don't like the kind of intrinsic value. Okay. If you were to rate or scale intrinsic value on a scale of 1 to 10, 10 being good, 10 being gold, 1 being cryptocurrency, that's where I'd put it. Right at the very bottom. Worthless intrinsic value. All right. It all comes down to, and I know that they're arguing, it all comes down to what somebody willing to give to you for it. You know, nothing has any value until it sells. So a house has no value until it sells, but the house has a use. You can use it for something. You go live in it, get out of the cold, you know, store your things there, have food there. You know, it has a value. You can't do that with Bitcoin. You can't go live in it. You can't go put it in your teeth in case, you know, you have a cavity. You can't go build anything out of it. It's got no intrinsic value, and you can't convince me otherwise. I don't care what everybody says, but it's got no intrinsic value. Oh, you can see Chad's giving me all the arguments. Ask the bank to pull a credit card transaction from 3 years ago. No way. Blockchain, you can see every transaction, every mode. You can track your worthless, worthless investment, no intrinsic value investment, right down to the last penny. I know you can. Doesn't make it valuable. Just because, you know what? We have a saying in this industry. It's like, if you can't track what's important, you track what you track. If you can't track what's important, you track what you can track. You make important what you can track. That's what it is. If you can't track what's important, you make important what you can track. So that's my answer to Chad right there. Oh, with Bitcoin on the blockchain, we can go see every single transaction ever made. Okay. So I can show you every single bald head on my hair on my head. I can track every single one of them fell off onto the pillow. So what? It means nothing. That doesn't give it value. Doesn't give it any value at all because we can track every transaction. Who cares? I can go back and look at every time the guy mowed the lawn and the grass that he cut and he threw in the garbage. I can track it all. Doesn't make it valuable. Just because you can track it doesn't make it valuable. I need to make a new slide. It says that. In fact, I probably got one in here somewhere. I just don't know where it's at. If you can't track what's valuable, you make valuable what you can track. All right. Okay, so it's fungible. You can send 50 million to another person. Okay, ask the bank to do that. It takes 5 days. Bitcoin network 30 minutes. Actually, in the bank, I mean, I'm not trying to say that Bitcoin isn't good for purposes of what you're talking about. A transfer of wealth, okay, use it for that. But still, I can send through Zelle, Z-E-L-L, through the banking system. I can send $50,000 to you and it'll be there in a heartbeat. It'll be there in way less than 30 minutes. It'll be there in a second. Now, the problem is $50 million, they're going to not let me do it very fast because they're going to have to verify it. Zelle, though, anything less than, when you're to the money that you're qualified for, you can send it in a second. But the thing is what the value that it has is the transferability of money. And I will agree with you on that, Chad. I will agree with you on that. You can send money, you can put your money into Bitcoin and you can send it and then get it back out on the other side. But what are you going to do with it? What do you always benchmark Bitcoin against? The US dollar. How many US dollars can I buy with my Bitcoin? That's what you want to know, right? That's what you want to know. You benchmark it against the US dollar. Everything is benchmarked against the US dollar. Gold is benchmarked against the US dollar. The only difference is gold has intrinsic value. Land, does stock have intrinsic value? You're talking about the same thing. Here you're saying go put your money in stock and it has no intrinsic value. Well, the stock that you buy has a representation of a company behind it, a corporation with employees, and they produce a product or a service. And, the value of that company is what you're buying and selling. Now you're trading the future value of that company, yes, but it's the value of that company, right? So the value of that company is represented by the shares that you own. So you actually own a piece of the stock, or you own a piece of the company, the underlying asset, which is an intrinsic value, has an intrinsic value. I know you guys can see the difference, and I know we're just sitting here running in circles. And there's advantages to Bitcoin. I'm not saying there's not. I'm just saying it has no intrinsic value. And I don't want to put my money in something that if has no intrinsic value. I mean, gold, if you're looking for an intrinsic value, if you're looking for if you're looking for the purposes of what Chad's saying, which is fungibility, I mean, the ability to move it around, to put it somewhere, have it safe, have it secure, so that if a bank fails, it's not in the bank failure. But still, somebody's going to say, well, if the dollar falls through the floor, I'm going to be safe because I have my money in Bitcoin. Somebody has still yet to explain to me why, if your money's in Bitcoin and the U.S. economy flops and falls to nothing, why your Bitcoin's still going to have money. Well, because it's based on the entire world's economy, not just the United States. Okay, I'll give you that, but the entire world's economy is based on the United States. That's why they're trying to create a BRICS currency, right? No, Bitcoin doesn't thrive off of a weak dollar. Fear and greed thrives off a weak dollar. Fear and greed thrives off a weak dollar. So anything that is has intrinsic value is going to thrive off of a weak dollar, right? That's the whole idea. If the dollar's strong, people want to put their money in the dollar. If the dollar's weak, they want to put it in something else. You're just taking advantage of the fact that other people have been taught their entire lives that they want to put money into something other than the US dollar when the dollar's weak. And so you've been brainwashed into thinking that Bitcoin is a good place to put it. Now, I say brainwashed. I mean, I'm not saying that you can't get your money back out, but it's got no intrinsic value. It's got no use. The use is the transferability and the storage of it. And the more people that put it in there and want to store their money in there, the higher the price is going to go, because there's only so many of them, right? They can't print more of them. I understand the arguments. I understand why it goes up. I just telling you, it doesn't have any intrinsic value. You can't go use it for anything. There's no uses of it whatsoever. You can't go live in it. You can't go drive it around. You can't go keep it over your head and make you warm. And you say, yeah, but you can buy all those things with it. Well, exactly my point. Exactly my point. Okay, so that's enough. Let's go talk about something else. Okay, let's go over and talk about our portfolio. Let's pull it up. Now actually, I want to start with, I want to start by right here. I want to come to here, and I want to come over to my portfolio. Now we're going to, again, I'm not here to tell you guys what to do. I'm just going to tell you what I'm going to do. Let's make me bigger now. Then we can make the screen bigger. So I'm just going to tell you what I'm going to do. So I need to do some things. I've made a little bit of money, got some dividends, and I want to decide where to put it. Now, I had a student ask me the other day. He said, Lan, I subscribe to this portfolio matrix thing, and I'm tracking all my dividend income and stuff, and it's doing really cool, and I'm having fun, able to watch the lines go up and all that kind of stuff, and see my numbers accumulate in value and all that kind of stuff. And now I want to find something else to invest in. How do I use it to find something else to invest in? So you don't use portfolio matrix to find something else to invest in. Now it can help you decide what's best between a couple of different things that you've already chosen, but it doesn't go out and search and find for things for you to invest in. Now, if you want to find things to invest in, well, we're going to invest in the stock market is what we're talking about, right? In particular, you can come and use little scanners. That's why we talk about you come in and you go to these little things here. And these little things can help you find things to invest in, right? I like the bubble scanner. So you can find things to invest in by finding out what's hot and what's not, right? So market capitalization is a good way to look. You got NVIDIA. Do you want to invest in NVIDIA? You want to invest in Microsoft? You want to invest in Avgo? You want to invest in Apple? You want to invest in Meta, you want to invest in Google. These are some of the big stocks in here with lots of people who are investing in them. And lots of people investing in them generally drives the price up, right? So you look at these and you say, over a period of time, these markets have a tendency to rally and go up in value. You can do your fundamental analysis. You can come over and you can look at them individually. You can say, oh, let's go look at PLTY, sorry, not PLTY, PLTR. And you can come in and you can look at the individual stocks, and we're not going to do technical analysis on them right now because that's deciding when to buy, right? We're going to come down here and we'll say, oh, well, this seems to be a good company because it's making money, and that's what we want. We want to buy into companies that are making money. We don't want to buy companies that are buying their shares back because that's a false rise in earnings per share. So this company is not buying their shares back. They're making money from year to year. Their earnings per share is up. That's good. Look, all the companies, the big companies are upgrading them. Then we want to come and look at the news and, oh, are they having good news? Are they doing good things? Mostly the news is irrelevant because this is really the most important thing right here. Are they making money? Are they buying their shares back? And do they have earnings per share? And then you can come in and see the details about, oh, they're making this much money this year. They made this much money last year. Is it still rising? Yes, it is. Oh, they're making good money. Oh, they're making money. Oh, look, this is all great and wonderful. I want to be a part of this company. All right. That's how you find a company to trade in. So your uncle's neighbor's cousin comes in and says, oh, I found a great stock tip. You should trade this stock. Well, you don't just go in there and say, well, I guess I'll trade that stock because my uncle's cousin brother, he's really smart. So you come in here and you do your research and you find your stock and you look at it and you say, well, is the company making money? Is the company buying their shares back? Are the earnings per shares good? Is the upgrades good? Are they downgrading good? Look at some news. Find out a little bit about it. Go over to, we got the greatest tools in the world nowadays. I mean, go over to Grok. grok.com and do a little research on there. Do a SWOT. If you've been reading Pitt News Magazine, oh, look, they're going to try and meet Grok 4. Crushes math and reasoning, benchmark searches, best, better. They want us to try Grok 4 now. Okay, we'll try Grok 4. So we're going to come in here and we're going to say, Grok 4, give me a SWOT. Now, if you've been reading Pitt News Magazine, for those of you who have Pitt News Magazine, you know what a SWOT is. I'm going to give me a SWOT on Palantir, PLTR. And it's going to go out and it's going to do some research for you. And this is something that we've never had before, right? This is all brand new. This is really cool stuff. And it's going to go out and it's going to do all the research that you and I would have normally spent a day doing, just trying to find out whether we wanted to buy a stock or not. So it's going to go out and do it for you. And it's going to give you this little report called a SWOT. And we love Grok. Grok's become my favorite what do you call it, AI tool. So I like Grok. I like Grok better than all of them. Now I have all of them. I've subscribed to all of them. This, Google's is not bad either. This Gemini is a pretty good one if you like Google, but I like Grok better than Gemini. And I like Grok and I like Grok better than all of them. I still use ChatGPT because I got so much stuff in there, but it's pretty good too, But if the first go-to for me is Grok. I like Grok. So I come in here and it's going to come in here and say, as of October 2025, Palantir Technologies continues to demonstrate strong growth in the AI-driven data industry. Q2 revenue reaches $1 billion in full year projection to be $3.9 billion and $4.1 billion, below is a synthesized SWOT analysis based on recent financial filings, market reports, and analysis insight. Here's her strengths: leadership in AI and data analytics and proprietary platforms like Gotham, Founders, Apollo, and AIP. Now, these guys spend most of their time working with the Department of War, right? So with the Department of Defense, Department of War, this is their big bailiwick. That's what they do. They take the AI stuff. Now, they're not actually writing the big language models like Grok and ChatGPT. They write a front end to it, and then they tie into it with the APIs. All right. So they use the APIs, but they write stuff for the military. So the military can spy on their enemies, and the government can spy on their people, right? They like to write that kind of stuff. And the reason I think that they've got a bright future is because the government is their primary customer, and the government just can't help themselves. They can't help themselves. They have to spy on people. That's what they have to do. It's in their DNA. So it's not like you're going to have even President Trump go in there and say, don't spy. We're going to spy anyway. That's what we do. All right. So they want to tie all of their different agencies together. They do a lot of that, but then they like to spy. And that's what Palantir is really good at. All right. They're good at writing spyware, spy gear, spy software for the military. All right. So if whether you like that or not, that's what they do. All right. So that's what they do, and they're really good at it, and they're in the government, and they're weaseling in like what weasels into something like a gnat. All right, like a tick. They're like a tick at the military. They're just weaseling themselves. They're digging themselves in. And so it's going to be hard for the government. If they wanted to switch, they probably can't, because they're getting so tied into them, they can't get away from them. So all they can do is grow. That's my opinion. So I think we're going to see a lot of growth in this particular stock. So that's what you do. That's how you find a particular stock that you want to trade. Now you can come in and you can ask Grok once again. We can come in and we say, okay, Grok, in the stock market, what ticker symbols invest in Palantir? How do you spell Palantir? In Palantir. PLTR. I know the stock itself, but what other stocks or ETFs invest in PLTR? All right, so now you can look at ETFs, you can look at funds, you can look at derivatives, you can look at all kinds of different ways. He's going to go out and tell you a list of different ETFs and companies that you can invest in, put your money in, that are going to put some of their money in Palantir. You might not want to put all your money into Palantir or buy the Palantir stock itself. You might want to buy a derivative, or you might want to buy some sort of diversified portfolio based on Palantir. So this is what we do. That's what I do. I mean, I like to buy the PLTY, which invests in Palantir with options. Okay. So that's what PLTY is. It's a yield max fund. And that's, you've been here longer than one time. You've heard me talk about that incessantly. So some symbols came up. Oh, it's still thinking about the user's request. So it's still working on that. While we're working on that, it's got it done. Okay, ETFs holding Palantir technology. So here's all the companies that you can invest in, or all the ticker symbols you can invest in to invest in Palantir. Adaptive Selective, ADPV. 12% of it's in Palantir, 10% of SGRT, 10.4 is in IGV, 10.8 is in IECD, XR. All these invest in Palantir. ARK has approximately 7 to 8%. ARKK is approximately 6 to 7%. PLTU is 100% leverage. So we can go look at PLTU. Maybe we want to go look at something that's 2x leverage, bull market based on Palantir. PTIR, PLT, PLOO, PLTY. That's the one we chose right there, right? That's the one I have. You got the Qs. Of course, the Qs, Invesco. You know what I'm surprised he doesn't have is the SPY. Oh, here it is. Additional broad market ETFs. So VTI, SPO, SPY, VU, IVV, VUG, XL. These are just the S&P 500 different companies that manage S&P 500 indexes. So that's what all those are. And there's SPY. That's the one I was looking for. So it's just in the S&P 500, right? So that's pretty cool. You can come in and it's amazing that we've got this research available to us now. I hope you guys are using AI to help you discover stocks to trade. Now we can come in and we can say, well, I want to look at something that's pretty heavily. Oh, look at that. PLTU. Let's go look at PLTU. So now we can go over and we can actually, can you give me all these ticker symbols in a comma separated list? See if it'll do it. Thinking about the user's request. There we go. So cool. We just grab that little piece right there, hit Control C, copy, and we go over to track and trade just like this. And we're going to say new, and I'm going to call this my Palantir, Palantir, can't spell, Palantir symbols. Let's say, not call it symbols, invest ors, funds, investor funds. Okay, there we go. So now we can come in here and all we do is just Control V, paste all those symbols in, and track and trade will open up every single one of them for us, just like that. Now we have all those symbols in there. Doesn't know what RXAI is. Okay, just skip that one then. All right, so it's loading all those up. Let's start with the first one. There you go. Series, portfolio, trust, adaptive, selective, and there's all these have Palantir in them. And you can come through and decide if there's any of them that you want to invest in. And so then if you want to, these are all going to be derivatives. I mean, they're going to be individual funds. Look, there's the Qs. Unbelievable. 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 SR tidal wave. What the heck is that? Shield, SPY, Vanguard, VU, VT, VUG, XLK, PLTY. There's ours right there. Now you look at that one, you're like, that's the worst one. No, you got to realize that the reason we're in this one is because it's not growth. This is, I mean, it's coming down now, and that's not good. We don't like to see that, but that's what I was telling you. You got to be ready for that. So what we can do now is we can come in here and we can look at some of these, and maybe some of these give us dividends, or maybe some of them. Let's ask again. Which of these funds provide dividends? Okay, says the query. Oh, don't do which narrowed down expectations. Typically searching. ARKK also has dividend history. Suggestion provides this. It's showing you its research. Thinking about the user's request. Palantir shows a high yield of 77 PLTY, 77 point monthly yield. That's the one we're in. ETFs that provide dividends. Okay. Well, almost all of them do. Okay, so here we go. Let's go down through here. ADVP, yes. Active managed growth, ETF distribution available, not distribution available. Dividends. SRGT doesn't show it. Low yearly expectation, quarterly dividends, 0.44 yield on IETC. Monthly income via options, RXAI. Let's go look at RXAI. I'm going to come over here and look at it in this one. RXAI. Was that one? Did I say it wrong? RX. Grok, where'd you go? Where'd Grok go? RXAI. RXAI. I put that in there. Oh, no, that's not the one. Equity income ETF designed for monthly income via options. RXAI. I wanted to see what RXAI is. RXAI. Yeah, it's not going to come up. I wonder if Track and Trade has it. Let's go see. Track and Trade doesn't show you the dividends, though. I want to see dividends. RXAI. Oh, that's the one I couldn't find. Okay, I don't know what about that one. What about that one? Let's come back over here and ask Grok. Shield, Defense Tech, approximately 0.39%. That's not any good. Frequent distributions, last 3 years, and Innovation ETFs, infrequent distributions, has dividend history, ARKK. We know them. Mid-gap growth, 2 times leveraged PLT, no meaningful distributions, 2 times long Palantir, leveraged, no distributions, leveraged long, 2 times month, 2x monthly leveraged PLT, no distributions. So I want to go look at those too. I want to go look at these leveraged ones. So QQQ, nothing. VTI, nothing. 1.2%, 1.2%, 1.2%, 0.4, 0.5. See, the only one you're really going to get any income off of is the PLTY. All the rest are growth. So that's giving you a yield of approximately 77%. And that's where it's like, what? Gives you all the growth, but it gives you all the yield, but it doesn't give you any growth. No growth to speak of. So that's why when we looked at it over there, it was going down or it goes flat. And you're like, I don't want that stock. Yeah, but it's giving you a 77% return on the yield. So if you want to trade for income, trade the yield. If you want to trade for growth, trade something else. So we can come in here and look at these PLOO and PTIR and PLTU. Those 3 right there I want to look at. Let's start with PLTU. Now, it doesn't have any dividends, so we're going to look at it in Track and Trade. PLTU. PLTU, this one here. This is a 2 times leveraged version of Palantir. So it should look exactly like Palantir, but it's just a 2x version. So if you put in $100 in this one and you put $100 in Palantir, you're going to get twice as much out of this one, right? That's really basically what it's saying. So really it comes down to how much are they going to charge you? What's the management fees? Right? It might be probably around 1%. Let's go look at the other one. So this is the other one. Let's go look over here. And the other one, that was what was that? That was PLTU. We're going to go to PTIR. PTIR. This is another one that's 2 times leverage. It's going to be exactly the same. They're going to all look exactly the same because they're just for growth. It's just 2 times leverage. It's just which company do you want to be with? Oh, this is Granite Shares. PTIR. That's Granite Shares. We like that company. We have some Granite Shares stuff, right? So they have one, but it doesn't give you they don't have any dividends on it. It's just strictly growth. Yeah, PTIR. Let's go look. PTIR. Let's look over here. PTIR. That's a Granite share. See, there's no dividends. It's just growth. It's 2 times leveraged. You know what I really would like to know on some of these 2 times leveraged, what would be cool is if they had options, because then you trade options. That's what Granite Shares does with their stocks. So they got some open interest, but their volume's really low. Well, that's because the market's falling. Let's see if there's any puts in here. Nobody's trading puts. 190. The volumes are just nothing. Oh man, look at the spread on this thing. That's worthless. We can't trade that. Not with options. Okay, let's go back over to Grok again. And let's see, what was the other one? That was 2x leverage. That was PLOO. I want to go back over before we go down to PLO. Well, let's just go do it while we got it on our mind. PLOO. 2x capped acceleration PLTR monthly ETF. There's no options on it. PLOO. Let's go look over here. See if it's got, I don't know. PLOO. Why the heck would anybody trade this thing? Leverage shares, 2x capped, accelerated PL monthly ETF. No dividends. It's just straight growth. It's just a new one. Just a new one. All right. It is what it is. There's no options on it. Let's go look at, what was that one again that we looked at first? I want to see, it was PLTU. PLTU, does it have any options? Can we trade out? No, it doesn't. So the only one is PLTY that has options, and they suck. So you can't trade options on any of these 2 times. You can, but look at this. Look at the spread, $100 on an 8-day option. That's for a put. What about a call? What about the calls? Man, see, they're no better. $190, 8 days. $105 is the cost, and $190 is the spread. Who in the heck would be buying and selling options on these damn things? They don't look at the spread as part of their cost. That's terrible. Terrible. You can't do that. Don't do that. So there's all of your ways of investing in Palantir. Okay. The one I've chosen is this one right here. It's called PLTY. And I like that one. And you look at it and you're like, it's falling. Why would you be in that? I'm going to show you. So now we're going to come back over here and we're going to look at portfolio matrix, and we're going to go over and we're going to go in PLT. I'm going to show you PLTR. Okay, this is the stock itself. This is Palantir, the company. And you can see the gain is 321%. That's kicking ass. All right, that's really super good. That company went up 300% in the last year. It's got no yield, 0 yield. So no income. It's just straight growth, but 300% growth is cool. And it's like, well, I wish I'd have traded that. Yeah, well, me too. I wish I'd have had, $1 million in there. It'd be worth $3 million today. 300% increase. So I don't have $1 million in there, and I can't go back a year ago. So you say, well, maybe Palantir is going to do 300% again this year. Is it? If it is, why don't you go put $1 million in there? Go sell your house, sell your car, sell everything you got, and put it into Palantir, because next year it's going to be up 300% again. Oh, well, maybe it's not. I don't. Just because it did it last year doesn't mean it's going to do it next year. Oh, what? You're telling me I should have put my money in Palantir PLTR instead of PLTY, and then you're Len, you're dumb. Why did you put your money in PLTY? Well, I didn't know that Palantir was going to go up 300% last year. I didn't know. Who knew? If you think it's going to go, if you're so smart, go put your money in there and think it's going to go up 300% this year. You're so smart. If you can trade in hindsight, I can't trade in hindsight. Just because it went up 300% last year doesn't mean it's going to go up 300% next year. Is it going to go up at all? Maybe next year, maybe it'll just go sideways all year, and you'll put your $1 million in there. It might even go down 10%, and you'll lose $100,000. Oh, well, maybe that's what Palantir will do next year. I don't know. What's 2026 going to bring? He's going to bring a big Palantir. I think Palantir is going to do well next year. He's going to do 300%. I don't know. Might be worth putting some money in there, right? What if we did this? What if we went into a different ticker, right? PLTY. I got to click on it. PLTY. Now, the gain last year for PLTY was only 25%. You're like, well, that sucks. If you'd have been in PLTR, it'd have gone up 300%. That's true, but I didn't know it was going to go up 300%. So I'm happy with 25% because it gave me a yield of 79%. Now, the yield is something I can count on to be similar. Even if Palantir goes down, I'll still get a similar yield out of PLTY. Why? Because they're trading options on it, and they're collecting the premium from selling options. And even if a market goes down, they can still sell options and collect premium. They can still make money. So 1 in the hand or 2 in the bush. Well, in this case, I'm going to go with 2 in the bush. No, I'm not. I'm going to go with 1 in the hand, because I'm going to go for the yield of approximately 79%. Because I understand where that 79% comes from. It comes from selling options, and it has to do with this little column right here. I'll show you. We'll go into PLTR. And I'm going to show you this column right here. This is the call options. And see this little column right here is called implied volatility. And I can look at that implied volatility column and I can say, look, as long as it's right around that range, right now it's returning at a 47, 47% implied volatility. That's a 1 day. Let's go see what, because they're switching over. Did you see that? They're switching over to doing their dividends every week now on all Palantir stocks. All Palantir stocks are switching over to trading their dividends on a weekly basis, not on a monthly. So now you can compound 4 times a month instead of 1 time a month. And we thought 1 time a month was great because all the other stocks do it every quarter, 4 times a year. And we thought, oh, great. Now we can compound instead of 4 times a year. We can now compound our income growth by 12 times a year. That's really good. Now they've gone to every week. Now we can compound 52 times a year. That's crazy, right? It's going to be fun. We're going to see what they do. And I've noticed that when they do on the ones that they have switched over to weekly basis, they've actually done better. They've stabilized the NAV. The NAV has stabilized a little bit better. And I don't know why that is. I'm not exactly sure. They changed their system up a little bit. They're starting to trade, they're giving their dividends out every week. And I know they've shortened their time frames. They used to be doing monthly options and they've been going down and doing weekly and 2 weekly options. I know they've said that. So they're making some changes. They're trying to make things, they're new. It's only been around for, a year and a half, 2 years, some of them. So they're practicing too. They're practicing on us. Give us your money. Let us practice on you. Okay. It's been pretty good. They've done pretty good practice on me. I'm pretty happy with it. Now, Palantir looks like it's going to go down. I think we're getting a little double top in here, and I think we're going to get a flush out. I think it's going to be a pretty nasty flush. Probably back down to the red line. That's okay. The idea is that you don't have to, just because you got some money burning a hole in your pocket in your account, and if we go back over to over here, and the yield on this thing is 79. So if you take the yield plus the gain, last year, Palantir gave us 105%. Now, it's not the 300%. It's not the 300%. And if Palantir goes down next year, well, your gain's going to go down. Let's say it goes down 20%. Well, it's still going to have a yield of somewhere similar to the 80% yield. So let's say that goes down to 70% yield, knocks 10% off of it, or even a 65% yield. And you have a gain loss of 10%. So you're still making 50% return on your money, 40% return on your money. That's pretty cool. You can lose the underlying stock can actually go down and you can still make money on it because they're selling option premium. They're collecting premium. That's how you make your money in here. You're not really worried about you're not really making your money on the gain. It's nice to see a gain, but that just means they didn't give it to you in the yield. That's all that means. You had a 25% gain. You're like, well, I want big gain. Okay, well, that just means they didn't give it to you in the yield. They could have a bigger yield and a smaller gain. See, because this is Palantir, PLTY. It's not Palantir, the stock. So they control the gain. They control the gain. They know they can control how much they want to have a gain because they can control it in the yield. How much they want to give you back this month. More, less, whatever. And if they have a little gain go down, that's okay. Fits within their models. They just won't, they can give you more back, or they can not give you more back. Give you a bigger return, give you a bigger yield, give you a bigger dividend this month, or give you a smaller dividend this month. And they fluctuate. For those of you who have been trading in these markets, they fluctuate. They go up and down. Sometimes you have big months, sometimes you have small months. We talked about this, right? Where they have basically what I call a reconciliation month, where you have a month that's kind of weird. It's different than all the rest. Or a reconciliation week on some of the weeklies, where they it seems like they're kind of reconciling and making adjustments as they go. So they're adjusting the gain. So they control now they can't control it completely, because if you go over, I'll show you an example. MSTY, which really pisses me off. But this is your Bitcoin that's just done nothing but go straight down ever since the first of the year. This is Bitcoin. It's just a piece of shit this year. Been good in the past years, right? But it's a piece of shit this year. And so their gain is down 47%. Well, they can't control it too much, but they're giving you a yield of 113%. They're selling options on this stuff like crazy because people are hanging on to their shitty ass Bitcoin, right? And so Bitcoin's been going straight down. So the yield, the gain has gone down on the Misty fund 47%, but they've given you 113% yield. So that's a total still made 66%. So while those of you who had money just in Bitcoin, you lost 47% of your annual return. 47% in the last year. Well, that's Misty. Let's go look at something that's MSTR is the underlying, and that's the one that's actually the one that is invested all their money in Bitcoin. So they still had a gain, I guess. They had a gain. Let's go look at BITO too. Let's see. BITO's more of a representation of Bitcoin over here. BITO's I need BITO. BITO. How come I can't get BITO? Oh, there it is. BITO. Well, it's had a gain of 19%. All right. So 19%. It's not the 300% of Palantir. So Bitcoin's gone up 20% this year. And that's not bad. I mean, 20%. No, most people would think 20% was good. The S&P 500's gone up, what, 12%? And everybody's like jumping up and down. Oh my God, 12%, making so much money. So Bitcoin's done better. It's up 19%. But that's all you would have got, 19%. That's your growth on Bitcoin this year. Most people want that 100, 200% that Bitcoin's been doing in the past. But this year it only did 19%. Well, the yield on it was 49% by selling options because we did BITO, not Bitcoin. And so we got a 69% gain plus yield. That's damn good. 69% is much better than 19%, right? But that's where we come back to this MSTR. I got a MSTR. Clickland. I like to hit enter and it doesn't do it when I hit enter. So MSTR had an 80% growth from this year, but it's, once it had its growth, it just went straight sideways. Hasn't really done anything. Let's go 6 months. See, 6%. It's just in the last 6 months. It's just not, it's dead. Bitcoin's been dead. You had that little burst there at the first of the year, and then it just went dead. It just died. And then, but the yield on it, see, there's no yield on this one, MSTR. This is Bitcoin, basically. I mean, it's a company that all their wealth is in Bitcoin. So they have no yield. But you got your 80% and you're happy. Way to go. Nice job. But it's all came at the first of the year. It's done nothing ever since. So then we do MSTY. And we lost 47%, but we gained 113% by selling options. We're still at 66%. So we made 66% this year on trading Bitcoin. Better than if you'd have bought it. All right. That's all I'm saying. That's how you do it. So that's how you discover, that's answering the question my student had. How do I find things to invest in? How do you find things to invest in? That's how you do it. That's how you find things to invest in. So you want to know what the yield is. If there's yield, if you're going after yield, if you're not going after yield, you don't have to look at the yield. Just look at the gain alone. But this is a pretty cool little calculator that shows you the yield. I don't know any other calculator. If any of you know another calculator that does this, shows you both yield and gain, and then adds them together, shows you the deviations, then let me know, because this is a little cool little calculator right here in Portfolio Matrix. Now, if you come over to the Pit News calculator and we go to the break-even calculator, I don't want UBI calculator. I want dividend calculator. All right, that's this one. And we come into the break-even calculator and we go down to, let's just do Palantir again, since we're talking about it. LMNOP Palantir, PLT, PLTR, PLTY. There it is. Now, this little calculator shows you that exact thing. It shows you, it says, okay, if you were in PLTR, the underlying, if you put $10,000 at the first of the year and the Palantir it just went straight across, made no money. You held it for an entire year and Palantir made no money. How much would you have made in PLTY? Well, you'd have made 22,000. You'd had a gain of 12,000. Shows you in this little chart right here. So the petty cash out. So if you'd have taken the money out $12,000, that blue line is what you'd have made. Okay. That's what my wife does. She has Palantir, and we put a bunch of money in there for her. So she has her money, and then she just takes it all out. She doesn't reinvest any of it. So at the end of the year, this is how much she's made on her $10,000. She made $12,000 on her $10,000 investment. And then she buys stuff with it, right? She goes and buys clothes. Mostly she sends it back to the Philippines because I am married to a Filipino. She sends it back and helps her mom and her brothers and helps her sister and helps some people have a better life, right? That's what she wants to do with her money. So she helps them. Bought her mom a new bed the other day. So that's nice, right? Things that she wants to do with her money, but that's taking the money out, even though if Palantir would have done nothing, she would have still made $12,000. That's what this little calculator shows you. If she had reinvested her money, $10,000, she'd be up to $22,000. But she didn't. She took it all out, so she made $18,000, right? And her $10,000 is still there. She'll make another. If Palantir does zero again, she'll do the same thing next year. She'll have at the end, she'll have 18,000, and this one here would have had 22,000. And then you can move this. You can say, well, Palantir didn't just go from 0 to 0, didn't make nothing. It made something. Okay, well, what did it make? Well, maybe it'll go up to 50%. Now, Palantir went up to 300% last year. I don't have 300% on this scale. It just goes up 50%. But if it would have made 50% increase, then, well, your PLTY would have made $21,000 in gain, or a 212% return. If you'd have just taken the money out, you'd have taken out 23,000, right? So even still, these markets make a lot more money. Now, if I had a scale that went farther off, it went to 300, this red would eventually go above the green, would eventually go above the blue. But how often do companies make 300%? How often do companies make more than 50%? That's why we stopped the scale at 50%, because we're like, well, it's really rare to see a company make more than 50% in a year. But we've been on the Trump train this year, and a lot of these companies have gone straight up. So we have to have more than 50% to outperform the underlying investment that's going into these markets. So even if Palantir went up 50%, well, your PLTY is going to make more money. And if, let's say, it lost 50%, what happens if Palantir loses 50%? Well, PLTY is still going to make at the end of the year $6,000, or have a 62% return on its $10,000 if you reinvest it. If you don't reinvest it, cash out, you're still going to make $4,000. So Janice, my wife, she has more than 10,000 in there, but let's say it's 10,000. If she has 10,000 in there and Palantir falls throughout the year by 50%, she's still going to have $4,000 income. That's what this little calculator here is for. That's pretty cool, right? That's a neat little calculator. All right. Okay, so that's how it works. So if we come and look at my portfolio, I've got like a bunch of them in here. Let's just look at my UBI portfolio, my Universal Basic Income portfolio, and we're going to look at open positions. And so these are my open positions that I've got. And we're actually working on an upgrade to Portfolio Matrix. So there's an upgrade coming out. So those of you who own it, you know that there's an upgrade coming out because you got an email the other day that's going to make this next to real time. So you'll be able to come in here and see what your actual portfolio is right now. Right now, it's 1 day delayed. It does 1 day delayed. It tells you at the end of the day, it goes out, retrieves, and updates it. And now it's going to be, and all the founders, anybody who signs up right now, if you want to go sign up right now before the prices go up, because it costs a heck of a lot more money to do real lifetime data than it does 1 day delayed. Prices are getting expensive. So I don't know if he's going to raise price. I don't own the company. It's just my brother. It's my son. And of course, we work together on it, but it's his company, it's his business. And he said that anybody who signs up right now gets grandfathered in at the older price. And when we go live, I know his expenses are going to go way up. So I'm sure he'll pass that on to the people who use it. So if you want to get in there on the Founders Edition, where he guarantees you'll never get a price increase, now would be the time to go jump in and get this little tool. All right, so this is my situation, the dividends. Now this is over the last year. Okay, so I've received $237,000 in dividends in this one particular portfolio, my UBI portfolio, 30%. Total trades. So I've had, this is my yield. This is my gain. So I'm down 2% on my gain, but I'm up 30% on my yield. So that means I have a total profit in this one portfolio of $212,000, and I made 22%. Now I've rebalanced my portfolio, and hopefully next year I make a whole lot more. So if you come up here and look, you can see this is where I rebalanced, and now look at how much more I'm making. So I rebalanced into higher returning, better returning markets, and they've been returning better for me already. So I have in this account, you can see I have $788,000. That's how much made me. So out of my 788,000, now I think one of these tells me how much I invested initially. Contributions. I think I contributed at the beginning of this year 483,000. So 483,000 is how much I put into this market. I had in this market at the beginning of the year, and it's now sitting at 788,000. And I did all that with yield, not big growth. There's been some growth, not very much, but mostly you can see, this is my growth, this red line right here. And you see when I did my dividends, I lost some money. This is where I realized you don't call it lost. You just realized your paper losses, because I actually made money here, even though I realized paper losses down here. You can see my money was going up because the dividend, we're trading dividends, we're trading yield, we're not trading gain, right? So my yields still went up even though my gains went down. So I had a return of cash and capital. I had total returns this year 44%. And you can see that right here, return of cash and capital. So contributions 400, total dividends 237, 44%. Recoupment remaining before I break even, before it gives me back all the money, $269, 269,000, which it's estimating to be 6 months. So in 6 months, my entire account will be what we call a cash cow, meaning it will have paid me back 100% of everything I put in. All right. So I put in 483,000. It's currently sitting at 788,000. So that means that in 6 months, it will have given me enough to cover 100% of my 483,000. I'll be back to break even. I won't have any out-of-pocket risk. Well, I will, because I keep putting it back in. I don't take it all in, like my wife does. She never puts any of it back in. She just takes it all. So I put it back in. So I'm keep growing, and mine keeps growing. So I have additional risk. But that's my cash cow is 6 months, it says. All right, then you can come in and you can see, we'll come down here to this list. You can see every month how much money I'm making. So each one of the stocks that I put money into are a symbol. These are ETFs. So there's Palantir. There's the one we've been talking about. You can see I've been averaging, and they go up and down. And I put more money in and less money in, and have rebalanced a little bit. So there's 6,000, 8,000, 12,000, 7,000, 5,000, 9,000. I'm at 2,000 this time. That's because I rebalanced. I took some out. I put money in somewhere else, more advantageous. All right. So Misty, 15,000, 8,000, 7,000, 7,000, 11,000, 6,000, 6,000. That's how much it's giving me every month. So you can see across here, Bido, there's Tesla, 3,000, 3,000, 5,000, 7,000, 4,000, 5,000, 4,000, 9,000. So this month in September, it gave me $9,000 on Tesla. I put more money into it, and it's done good. So we can go look at that one. There's NVIDIA. There's Snoy. I got some in Snoy. So that's kind of how this thing works. And it just, we look at each one of these stocks. So you come down and you say, well, how are you doing on HOY, HOY? So you can come and look and see why I put HOY in there, HOOY. And we click on that one. And you can see this is a new one, but it's just went straight up. And that's pretty rare. Usually they don't go straight up out of the gate, but this one did. You can see the gain on it was 50%, which means that they're going to have to start giving a higher yield, because they don't want a 50% gain. Problem is the market went straight up. This particular stock just went straight to the moon. But the yield is based on the implied volatility. So let's go look at the implied volatility on this is all the Palantir ones. Let's go back over to this one here. And let's go to Hoy. Where is it? Right there. It's still queuing up. So this is Hood, Robin Hood, right there. Look at that market. Just went straight up. Holy cow. That's a brokerage firm. Okay, so there's Hoy. That's the one, and it just went straight up. See, it's just gone straight up. And that's this month. That's why this month was so good. But that's the whole year. But that's why it's in there. It's been a good stock, and it returns a lot of money. So let's go see go to Hood and see what the implied volatility is. See, implied volatility is 51. That's not bad. I mean, we generally consider 51 to be high implied volatility, but in some of these markets lately, 51 is low, right? But you don't know. You have to look at the historical. So we look at the historical HVOL right here, historical volatility, H, A, B, C, D, E, F, G, H land. So there you go, historic volatility. You can see now back here, the historic volatility, the implied volatility was really high during this time frame, believe it or not. And then it came way down as the market started to rally. It kind of went up a little bit more here, but then it flushed back down. That's 50% right there. So that's 50% on the implied volatility is a 30.49% on the historical volatility. So you can see that's the movement of the implied volatility in this market. It's going back up, but it's been higher. So we want that to be high. For our trading purposes, we want that number to be really high, because if it's high, then we get more premiums, right? High implied volatility means that premium costs are really expensive. So if you're trading, let's go look at a little further out. Let's go to 43 days. So it's implied volatility, 69. See, it went up. So a high implied volatility means an expensive premium. Now for us, because we put our money into the yield max funds like TSLY, that high implied volatility means that the premiums are really expensive. That means we get more money, right? So in a quiet market where market's not doing anything, it's just going sideways, like BITO or Misty. The market's just been going sideways. So our implied volatility has gone way down. Tesla was like that for a while. Tesla was terrible. Tesla was at the top of the list, went to the bottom of the list. See, all through here, Tesla we kept talking about where we thought Tesla might go. Get rid of that because it didn't do that. So there's this is where we think Tesla's coming to now. We think it's going to come back down into that Fibonacci sweet spot, right? But when it was going through here, implied volatility, we can turn it on. Let's go to historic volatility. H land, there it is. See how, look at this, volatility went way down. Look how high it was here. Way up in here, way up there, 50, 50, 60. And we know what the historic volatility is a little bit lags behind the implied volatility. So it's sitting at 25, and right now we're at 45, and that's a 1 day. Let's come up here to 43 days out. 43 days out, it's almost a 60% implied volatility right now. So it's going back up, all right? It's climbing, but it's been down here. Look how low it was before, 18. We were suffering. We were like crying the blues. What happened to my implied volatility? What happened to my what happened to my yield on Tesla? Right? Remember? We were crying the blues. Tesla, TSLY. We were like, how come our Tesla is so low? We come over here to the calculator and we go back over to the investment calculator and we put in $10,000. And we say calculate. Tesla, well, it's back to the top again. Oh, that's TSLY. TSLY is down here. See, clear down here somewhere. TSLY, right there. Look how low it is. It's gone into a low to moderate. Low to moderate. It used to be right up here. It used to be very top, very high. It used to be right up in here, in the top 5. Very high risk because it had really high implied volatility. Risk is good for us. We like that, right? So it was way up here at the top. Now it's clear down here. I'm sure that once this gets updated, we'll update it and it'll probably change because, implied volatility has been going up a little bit for it. But that takes us back over here. Yeah, implied volatility has not really gone up for us. We'd like that back up in this region here. This is where we're making a lot of money. These dividends coming in when the market was the volatility, implied volatility was way up here. We were making all kinds of money. Now, implied volatility went down here, but the gain went up. So we made good gain, but the implied volatility went down. So gain versus implied volatility, right? I mean, usually if the market goes up, implied volatility goes up. Implied volatility goes skyrocketing too. But this one didn't. It did at first right here, but then as it started to level off here, it started to come back down. So that's what drives it's the implied volatility. It's that blue line right there that drives your yield. So when you're looking at your yield and you see, now when you look at yield over here in Founders Edition and we go in here, this is accumulated yield over time. This is what your yield is accumulated over time. Right here. But this shows you the yield going up and down. Well, that's an accumulation over time too. That's not really that's not historical volatility. That's not what that is. So that's a little bit different. But that ended up being 53%. 53% return on your money with a 30% loss on over the year. Tesla in this Tesla took out 30%, but it gave back 84%, and the yield for a round out of about 53%. 53% is a lot of money. I know it's not 300%. It's hard to get those it's hard to find the ones that are going to make 300% next year. You just don't know. But 53%, can't get that at Cash Valley Bank. Remember, we're down there at Cash Valley Bank, 4%, losing 3% on inflation, making 1%. Okay, we're making 53%. Now we have to take 3% off that for inflation, so we're really only making 50%, right? 50.53%. You got to subtract inflation. All right, guys, that's all I got for you today. I hope that was helpful. See how to go and find things to trade. Bring them in here and then look them up, see how they are. Do your research over in Track and Trade. You can do your technical analysis. You can decide when to buy. Now we talked about what to buy next week. Next Tuesday, we'll follow up on this conversation and we'll go back into when to buy. Now I've got $7,000 sitting on the sidelines. Is that how much? I think I got 7,000. By the time, where does it show my cash? Cash. One of these tables shows me my cash. Maybe it's in another table. Anyway, I got about $7,000, but by the time next week comes, I'm going to have another dividend hit. So I have more dividends hit. I need to go look at my calendar. And then my calendar will tell me when my dividends come in. I'll probably have another 10,000. So I'll probably have about 17,000 by next Tuesday that we need to invest. So I don't feel just because I have it doesn't mean I need to put it in the market. Now you can, but I'm going to come and try and find a market that's in my portfolio that's on a little bit of a pullback. See, everything's on such a rally right now. I don't want to be adding into markets that are such rally. Oh, this and see Palantir's pulling back. So I'll probably be putting a little bit more. I'll wait for the next week. I think we're going to get this thing that's going to pull back a little bit, maybe down to the red line. If we can get that market to pull back a little bit, I'll start adding some of my money back into Palantir. How much? Well, Portfolio Metrics will tell me how much when we go to the targeter. And we'll talk about that next Tuesday. All right. So we'll pull up my portfolio. We'll look at it. We'll see how much money I've got to invest. We'll go over to the investment calculator. We'll say, well, Lan's got $17,000 that he needs to put into the market, and his portfolio he needs to put into the UBI positions. And we're going to hit apply, and it'll tell me how much money to put into each one. And then I can go and look and see in the chart which one I want to have it in, and then we can go check it out. And because if I do it the way it's saying, I'll average this year a 76% return on my money. Where last year, where I did it without this calculator and I didn't have help from Portfolio Metrics because we didn't have this tool, I only made 44%. So this year I'm hoping 70. I'm hoping that 2023 I'll be up closer to 70%, 70, better than 44. I'm hoping to be better than 44. All right. And we'll talk about that. We'll teach you how to do all that next Tuesday, 8 o'clock, bright and early. And then the week after that, I have my Tuesday, October 21st, is the first day that we teach a live class at the university in St. George. So if you want to be there, Tuesday, October 21st at the university, we can get you all signed up and ready to go. Go over to ce.utahtech.edu and sign up for my classes. Come and meet me in person. We'll meet in person down there at the university. We have people come in and stay at Airbnbs and come and stay for the week or stay for the class. If you guys want to fly in and stay at, go. You know what? I'll tell you right now is the best time to go to Zion Park ever. I'm telling you right now, go to Zion Park right now. Why? Because the government's closed, and all the people, what they do up at Zion Park when they close the government, all the people go home. So there's nobody manning the booths that keep you out of the canyon. So usually when you go to Zion Park down there in southern Utah, you have to get on a bus, a tour bus, and let the tour bus take you up the canyon. When the government's closed, all those guys leave. All the bus drivers leave. They go park them and nothing, and then they leave the canyon open, and you can drive through the entire canyon. Last time they closed the government was the best. I was so happy. We went to Zion Park like 4 times. and it kind of spoils you. It makes you so you don't want to go any other time. Because like, I don't want to go if I have to ride a tour bus up in there. I'd rather drive. I'll wait till they close the government again, and then I can go to a trip to Zion Park. It would be worth getting on an airplane right now and flying up there, because you can go there and drive through the canyon yourself. Because all the tour people have gone. They're left. They're gone. They just open the canyon and let you go. They don't lock it. They don't lock the gates. They leave the gates open and let you go into the canyon. Go to Zion Park. All right. We're going to have classes October 22nd. Hopefully, hopefully they don't start the government back up before that, because I'm going down there next week. It'd be really nice. I'd love to go to Zion Park, and I'm up here in northern Utah. I'm going to go down there next week and get ready for classes. And I hope the government's not open. I hope they don't open the government for like 2 months, 3 months. How about we not open the government until, I know we got a bunch of government employees. We don't want to, those poor guys, they need work too. But we always know they're going to pay them. They always do. They always pay you. You'll get your money. Hopefully you're going to have to live off your dividends for a couple of months. All right. While they close the government. And then they'll give you one great big, huge paycheck. And then you can put it all into the markets. Live skinny for a little while. All right. That's what we're going to do. Go to Zion Park and enjoy it, because the government's gone and all the people have left. All right. So this is the best time ever to go to these big parks. All right, guys, if you don't have Pit News Magazine, that's where I got so much good news about Pit News Magazine coming. I can't wait to tell you. We got some really cool stuff happening, and I don't know. I run out of time. I'll tell you on Tuesday the really cool stuff that's going on in Pit News Magazine. Just got to get.
Hey, Land Turner here. I got a hot stock market tip for you. Subscribe to Pit News Magazine. You can thank me later.
All right, so get Pit News Magazine, and here's the software we use today.
Okay, this is the software I use. It's called Track and Trade. They've got 2 versions, one for stocks, one for futures. This is the website, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, guys, that's it. That's what I got for you today, and hopefully you had fun. You learned a little bit, and we're going to pick up where we left off next Tuesday morning, 8 o'clock, bright and early. We'll see you then. Have a good weekend.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pit News Magazine.
Oh yeah, definitely subscribe to Pit News Magazine. You'll thank us later.